This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
The International Energy Agency, IEA, on Friday urged consumers to travel less, share transport and drive more slowly, part of a 10-point plan to cut oil use as Russia's invasion of Ukraine deepens concerns about supply. The plan by the Paris-based grouping of 31 industrialized countries, which does not include Russia, underlines the urgency of a supply crunch brought on by sanctions and buyer aversion to Russian oil, which has raised fuel prices. The recommendations, which include lower speed limits, working from home, car-free days in cities, cheaper public transport and more carpooling, could cut oil demand by 2.7 million barrels a day within 4 months, the IEA said.
Germany could replace around half of its natural gas imports from Russia this year in the event of a delivery stoppage, Utility Industry Association BDEW said on Friday. The group that represents 1,900 operators in gas, power and water supply said that according to its sources, Russia's share of Germany's gas supply in January to March, which is not officially published, stood at 40%. Estimates from analysts and utilities last December had pegged the share at over 50%. As of today, around 50% of Russian natural gas can be replaced or substituted in the short term. This corresponds to about 20% of the annual gas requirement in Germany, said BDEW Managing Director Kirsten Andrei.
Moving on to the top news in the energy sector.
OPEC Plus compliance with oil production cuts rose to 136% in February from 129% in January, two sources said, missing its target by over 1 million barrels per day, BPD, as an already tight oil market braces for major Russian disruption. The International Energy Agency said this week the oil market was set for a 700,000 barrels of oil per day supply deficit in the second quarter as Western sanctions on Moscow and buyer reluctance could lead Russian oil supplies to drop by 3 million barrels of oil per day from April. IEA-M. OPEC Plus produced about 1.05 million barrels of oil per day below its agreed targets in February, a third source said, up from 0.97 million barrels of oil per day in January.
Exports and transit of Russian oil from the country's western ports and via the Druzhba pipeline in the second quarter of 2022 are planned at 37.8 million tons, up from 35.8 million tons in the first quarter, a quarterly export schedule seen by Reuters showed on Friday. On a daily basis, oil exports in transit from Primorsk, Ust-Luga, Novorossiysk and via the Druzhba pipeline were set to rise by 4.4% in the second quarter compared to the first 3 months of the year, Reuters calculations showed. Oil supplies from Russia's Baltic ports in April to June were set almost flat on a daily basis compared to the first quarter, while Novorossiysk loadings will rise by 8.5%. Next, we have the top news in metal markets. Germany's metal and electrical industry would be hit hard by an embargo on energy and raw materials from Russia, the chief executive of the Gesamtmetall Association said on Friday. What the effects would be in the event of an intensification of the war, further sanctions or second-round effects, such as high inflation, cannot be foreseen at all, said CEO Oliver Zander. But the consequences of an energy and raw materials embargo would definitely be dramatic, and the Monday industry is already facing a massive cost explosion and another year of recession.
The Turkish steel industry, the European Union's top supplier, expects an additional $1 billion in exports to EU countries after the bloc banned steel imports from Russia and distributed its quotas to other countries. Top industry figures said they had seen new demand in recent weeks, especially from Baltic states whose main source was Russia. But they also said Turkey's local steel market may face imbalances and rising prices following the sudden demand increase. The EU sets country-specific quotas each quarter for non-EU countries to protect its domestic steel industry. On Tuesday, the EU approved new sanctions against Russia over its invasion of Ukraine, including a ban on steel product imports.
We will now look at the top news in the agricultural sector.
U.S. grain and soybean futures eased on Friday as traders monitored diplomatic efforts to end Russia's invasion of Ukraine and gauged continuing disruptions to Black Sea crop exports. More than 3 weeks after launching its invasion, in what Moscow calls a special military operation, the Russian advance has stalled and failed to capture a single big city. Still, a World Food Programme official said food supply chains in Ukraine were collapsing, with infrastructure destroyed and many grocery stores empty. Grain prices have been volatile since the invasion, as importers are heavily reliant on supplies shipped from Russia and Ukraine through the Black Sea.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.